The 10-year trailing return for the S&P 500 ranks in the 94th percentile since 1880. The market regained more than 300% from its financial crisis intraday low of 666 hit in March of 2009. So the question becomes, how much longer can this hold together? Let's take a look. We're going to be looking at two charts today, both on the 2-year weekly. First, we're looking at the spiders, the SPY with the close of 281.31. So from that bottom here, we've run up through the 50 and the 20 EMA. And with regard to this technical line across here, it looks like we popped our head above that. My line's not all that straight, but as usual, you get the idea. So it looks like we're popping up here, and I would imagine that we're going to continue running, and here's why. Looking at the MACD, again, the bottom at this point here, and then the fast line running on up here. Now it's well above the zero line with the slow line following shortly thereafter. I think it's going to cross the zero line here soon enough too. But it looks like a little bit of acceleration this week, so we kind of opened up a little bit, and we're going to continue to run here. Not hard, but I think we're going to continue to increase that above that zero line. Here, the same thing shows in the histogram with the bottom here and the run up there, and then a little bit of a dip here, but hopefully some acceleration to continue on up. In the price rate of change, which has a little bit of a delay here, we've got this sawtooth here, but the fast line is still above the slow line, and both will be above zero here shortly. Into the RSI, same thing, the bottom there, the run above the 50 line, and we have a little sawtooth at this point, and then the re-acceleration. The same shows on the stochastic. That looks fine. Now, as you go over here into the previous high, we're going to probably have some sawtoothing and some meandering as we move on up. We're in the overbought territory here above that 80 line, but I think we'll stay up here for the time being. Moving down here, the volume's fine. There's no real problems with that. And then the Williams, it's doing its sawtoothing here in that overbought territory between that -20 and 0, just like it did in this time frame here. So expect some more sawtoothing to happen as we, I believe, continue to move on up slowly but surely. Now, let's go to the next chart. So this next chart here, the CBOE, Volatility S&P 500 Index, or the VIX, the fear factor. So what's important to take a look at here is it looks like we're getting some sort of basing in this level here. So we need to watch that carefully for two reasons. First of all, we're getting the basing and the next move is going to be up. But also because this basing here is well above this base here. So we're getting kind of a step up procedure, and that can make for volatility coming forward. Looking at the MACD, even though the MACD is heading on down the fast line and the slow line, maybe even below this level here, I think the divergence that we're seeing with the actual price chart, we'll call it, that to me, this chart here is a little bit more concerning than the MACD. But the MACD is going to be basing here pretty soon, somewhat perhaps like it did back in this June, July through October timeframe of late 2018. Now this time frame here took probably about 3 to 4 months to bottom, but we're going to keep our eye on that. I'm not exactly sure we're going to be that long in a basing on the VIX. Things can happen and they can happen fast. So it kind of depends upon how this moves on up. Here we had a pretty good move on up, and then it sort of struggled through this point here. So we'll just watch to see how fast that this histogram on the negative side shrinks. And we'll watch the MACD itself too, of course. But as I was indicating, is that the price chart shows something a little bit different, but so does the price rate of change. The fast line's about ready to go through the slow line here pretty soon. So that can mean a little bit of action coming here sooner than what the MACD shows. Relative strength, that gives a mixed signal. That's with the MAC. Things look a little bit slow for now. Here into the stochastics, right back to what the price rate of change shows. So there's mixed signals going on here, and so that's why we have to take a quick look at everything on a more regular basis. The Williams is bottoming here, one sawtooth down, but the next move could be on up, but we're still in this oversold territory between the negative 80 and the negative 100. So we're pretty weak down here. So it's nothing that's throwing up red flags right now. It's just something that we need to be observant of. Back up here to the price chart. We'll watch this basing, see how it occurs, and see if we get any move in the pricing above the 20 or the 50 EMAs. And then we'll watch that MACD and the other oscillators just to see what's happening. Because this, if you remember, the VIX is essentially the inverse of the market indexes. So I like to have two perspectives. And this is a second good perspective to watch when things are developing. So we'll keep our eye on that for now. So for today, that's ChewDog Charts. Thank you.